Hi guys! In this video we're gonna focus more in a little bit of revision of what we've seen last year, but not balance sheet and income statement. We're gonna have special videos for this kind of subjects like statement of cash flow. We're gonna go on detail with that. On this video is just a revision. It's basically the principles of accounting and the purposes of accounting. Something very introductory for you guys to get into the world of finance a little bit, and especially with the principles of accounting, you're gonna have some basis for a lot of things that you're gonna see along the semester. We're gonna talk a little bit about the accounting principles right now. First of all, I wanted to mention with you guys the cost principle. What is the cost principle? The cost principle means that when you buy something or you sell something, you're doing any kind of financial transaction, for example, you are recording the cost or price of the transaction. It's not that in the opposite case, you would be recording the price you want or the cost you want. But that's why we have the cost principle. The cost principle says that if I agree with the supplier that I'm going to buy him a chair of 10,000 Swiss francs, then I'm going to record 10,000 Swiss francs. I'm not going to buy the chair for 10,000 Swiss francs and record 12,000 Swiss francs here. That's the cost principle. The second principle is the matching principle. The matching principle is important for you guys to link it with expenses. I have right here, expenses. You have to record expenses even though you did not pay yet for the service. For example, I buy an insurance for 6 months. So here you have the first, here you have the 6 month, and this whole insurance equals 1,200 francs. I will pay this insurance totally, or I might not pay it, I might put it in accounts payable, but I have to record that I'm having an expense. So basically, what we're gonna do is divide 1,200 by 6. And we're gonna get 200. This 200 represents a monthly expense. So this 200 would be the expense. In this case, it means that I have, even if I'm paying 1,200 on the end of the 6 month, I'm recording 200 monthly expense. I'm recording 200 every single month. I'm not waiting until the 6th month to write 1,200 in my expenses. I'm recording the expenses as they incur, as they occur, as they're created. Because this insurance is providing me with a service in the first month, so I'll charge 200 expense. On the second month as well, I'll put 200 expense. You see, I'm not waiting until the end of the 6th month to record 1,200 as an expense. So for the realization one, I can be a little bit more brief with you. The realization one is the same as the matching principle, but it applies for revenue. So it's the same. I'm not waiting until I get the money from that people who are supposed to pay me. I'm already recording my revenue. Of course, that if he pays me with the money with cash, I'm gonna put cash up. I'm gonna, in financial terms, I would say I'm debiting cash. It means increasing cash. If the person is not paying me yet, I will put accounts receivable, I will debit accounts receivable. So I left the easy one for the end. The going concern means that you as an owner or you as a worker of the company, you assume, you believe, or you promise that your company will go on. That's what it's called going concern. It means that you believe that your company is gonna keep working for indefinitely amount of time. So guys, just to end this revision video, to do it very quickly for you, I'm gonna talk about the purpose of the accounting, of the finances, because if you know this purpose, then you understand better why are we analyzing this, why are we analyzing that, why are we doing that. The purpose of accounting is the circle itself. It's not 1, 2, 3, 4, 4 individually. No, it's the whole thing. And it starts by the step number 1, which is accounting. Accounting is when you account, when you write down all the information of transactions. Either when you pay someone, either when you're putting expense, when you're recording additional capital in, paid in capital, when you're issuing shares, or when you have payables to increase, when you have accounts receivable to increase. This is all the accounting. This is writing down that information. Once this information is done for every single step of a balance sheet, of an income statement, when you form that statement, it provides you with information, which is the second step. Information is interesting for who? Information is very important for decision makers. These decision makers, they might be anyone from a bank, someone who needs to lend money for a company. So he will look at the information that was accounted to know whether he's gonna give the company this amount of money because the company is very good and I'm gonna give you a lot of money, or he's gonna give a little bit of money, or he's not gonna give money at all because the information shows that the company is not very good. It can be also governments to talk about the economy. It can be people like you and me who wants to invest in a company, or who wants to buy shares. Regardless of who are the decision makers, once they have this information, they will take the decision and they will make an economic activity, which means selling, buying, giving money, borrowing money, looking for the economy. And that is why we talk about accounting. And this is very important for you in the project to know why are we analyzing these two companies? Why are we checking these ratios? Why are we taking this, like this? Because of the purpose of financial accounting. So thank you a lot, guys, for watching. I hope you guys enjoyed. I know we didn't have any numbers for this first video, but I promise you I'm gonna give you a lot of numbers on the next ones, all right? Please check the page we have on Facebook for any new views, and especially for you to tell me what you want to learn. Like this, I can just schedule an appointment here in the class and I'll record it for you, and I'll send all the explanations of what you need to know for this subject or that subject. I also will offer you and guarantee we're gonna do sessions one-to-one, one to the group, like peer-to-peer sessions before the exams. I hope you guys like it.